Welcome back, guys. It's Nick. Wanted to hop on and just kind of catch you guys up on some things. Had my birthday last Monday, so just wanted to kind of de-stress, take in the market, follow my hedge positions, and just kind of let the fluff play out with everything going on. But I did want to hop on here, kind of give you guys an update on AMC, broad market, and kind of what we're looking at for the week of June 21, June 22 into expiration, following OPEX along with Quad Witching Day and the FTD, U.S. Equity Derivative Leap expiration. So as always, not a licensed financial advisor. I do hold my Series 7 and 63 and my SIE. Not currently sponsored by a firm, so anything I say here is legal. But at the end of the day, it is just my educated opinion on what I'm looking at and projections here. So obviously we're dealing with AMC. There's a lot that goes into this. A little bit of manipulation, of course, broad market dynamics, and just kind of understanding flow and what kind of sentiment we like to see. So a little bit something new here. I had a tweet about it the other day. We still have our horizontal bars that I'd mentioned before. Just some pretty key figures I'm looking at. And what I did add is something that a futures trader showed me while I was at TD Ameritrade. It's kind of like a harmonic projection point. So obviously you can tell I got some overlaps here, or things may be off just slightly. But basically, you go in through foundational TA, find your trend lines, and then there'll kind of be a point of interest that they all kind of stem off of. So here you kind of have your uptrend harmonic projection, gives you resistance and support, and you got your downtrend harmonic projection, and then your horizontal as well. So I know it looks like a lot of lines. We'll kind of make sense of that. Talk about zero gamma lines, what that means, what to expect from SPY going forward, and just kind of break down some things that I'm looking at. So as we get into it here, this is your 5-year 1 week chart, so kind of representing your week within a 1 candle period. So each candle here represents a full week on the last 5 years, and you can kind of see where I'm drawing these lines from. I don't use Fibonacci retracements or extensions too often, just simply because I feel like I can find trends better kind of within my own technical understanding. Obviously it's not kind of recommended amongst a lot of traders, but once you get kind of to a level of market dynamics understanding and just kind of pinpointing things based on vision and sight, it really starts to line up, and you'll see how accurate these lines get as we start to break it down. So obviously here's your low, 191, you got your January run, your June run, 34 run, and then some other things I'm looking at here. So we'll kind of get into it a little bit in regards to that and zoom in and just show you kind of how we're sitting. I know a lot of people are calling for some potential 8s. I heard 7.5s. Gosh, I heard sub 10. I mean, all those are like, I don't like to say it's not possible because nothing in the market is guaranteed, but it's definitely not something I'm seeing. So I hope you guys at least made it into this point of the video to where you can understand, like, okay, it's not a bearish outlook, and this is his opinion based on his experience on the street, etc. But here is kind of your weekly candles broken down some more, and it breaks into kind of your harmonic projection pattern here that I'm drawing, and you can see how it goes up and kind of fully respects these even within a weekly time frame, which is very encouraging to see. Just kind of shows that the TA is there, it means something, it represents stuff. But you'll notice, like, once it slips one line, it can sometimes catch a horizontal, or it can catch a rising or ascending support. And then if it slips that, it can jump down to the different trading range. So when I mentioned trading ranges and hopping them, these are kind of trading ranges in my eyes. So I don't want to spend a ton of time on this, just kind of want to show you a good breakdown, similarities within that. So I know we're trying to pinpoint a fractal and decide what cycle the algo's on. pretty difficult to fully pinpoint it. But you can kind of see, like I continue to mention, these wave type scenarios. So you'll see this rise up, down, and you kind of get a little bit of a wave up in this trading range, come back, wave here up and back down. So you can argue that this point here, I mentioned, is this point here. Obviously it's a huge extension, maybe more accurate to say or consider that it's this point, and you got your big dip down here off the top, and then it kind of came back up and got shot down, and you'll see similarities in it as we get closer. But this here is looking very similar to this movement here in regards to, you kind of got your butterfly doji candle here. Not the same candle, but similar. Obviously different sentiment within the market and broad dynamics given a different close on the weekly. But then you kind of get this candle here, which resembles something similar to this. Obviously you got a strong, somewhat of a hammer candle. And then you got your wick above, wick below, and full body in the middle. And then you got this red kind of candle that has a high peak. It tested the top of this ESD band, and then came back down here. Something similar here, it tested this standard deviation band, and we actually closed above it. But of course we had a lot of downside here as well. And something similar to the body closed at the bottom of the candle. Following week, this was a red one. This one was green, something similar. And then last week, it was a lot of sideways trading, to be honest. Pretty boring week. Continued to post TA and what I was seeing intra-week. But like I said, birthdays on Monday was kind of just understanding like market was bleeding. You can't expect negative beta in a negative 8% week on SPY at some points there. So it did show, and there's multiple instances where it clearly diverges from SPY, even though the SPY was doing terrible. But when we get into it here, I'll kind of show you, and I may be adjusting some of these horizontal lines if it makes more sense here, but just want to start broad macro and work my way into micro. So next we'll just kind of go to like a 2-year, 1-day chart, show you some more similarities that I'm looking at in regards to this and what the setup looks like. What I do really like about this current wave that we are on is obviously your OBV has not dropped, so whoever's saying that the meme traders are selling, aka Bloomberg, thanks for that. I don't believe anyone's selling it. There's been no indicative nature of that. It's just kind of riding trend lines, to be honest, until the market gets out of this fluff. Because if you look back at SPY, you'll see this kind of market melt up on SPY throughout this same exact time. If you look at Ortex, the same exact data matches as to where we're at way down here. So obviously we're hitting a low on SPY, really testing some areas at this point, and then caught a deep support underneath 10, which is also where your where the margin requirements increase. So I guess that was down here, sub 10. But you get you see this like kind of square bottom here. We've seen a lot of these recently, but we haven't had one quite as strong as what we were seeing there. In regards to this, like I love these, like it's a deep dive, then you get a strong double bottom off the top, deep dive, strong double bottom, testing the 50 EMA, and comes back down, holds support with the macro trend lines, comes back up, almost tested again, just tested the top of this trading range, comes back down, and kind of just keeps bouncing in this range. But if you notice, you got a deep dive, a little bit higher peak, not as quite of a deep dive, a higher peak, ride the support line, come back up, and you notice how these trading ranges kind of get tighter. It's like as if it's literally a ball stuck or getting narrowed down within a funnel. It kind of bounces in within here, and I'm expecting some big movements very soon. I know a lot of people are kind of capping it around 20 to 22.5. I don't want to say anything crazy quite yet, again, until we get the confirmation that the broad market is kind of going to give somewhat of a relief, because obviously that does play a factor. yes, if the market were to crash, that would also hurt their collateral, and there would be a covering take place to where we would go. But obviously, I don't think anyone wants a market crash, market dynamic wise. Um, a crash does not make sense right now. So I just kind of wanted to point out some key facts and things that I'm looking at within here just to show you a little bit closer view. So what I did was I hopped into the 180-day 4-hour just to give you some more kind of clarity here in regards to this, because it's really cool to see similar patterns here, because you kind of got your W here flips to an M, and then your M got an extension with a deeper kind of fall off leg, and then you got your kind of stair step. I mentioned stair stepping a lot. It's effective. It reclaims new trading ranges. It shows strength within the stock. And you kind of got your harmonic volume here. If you notice, you got this deep, low volume. Pretty much what we got all the way through here. But we got something very similar going on right now. It's where you'll see this red off the trough comes down, and you start getting a mix of your green candles in here on the 4-hour. It's very similar volume analysis wise as these two candles here versus these two candles here. And then you kind of get green, green, so it's flipping over to green quicker. And if you look at these 4 hours, like in regards to volume, it's looking very, very similar to this movement right here. Obviously, you're just a lot more compressed, but I'll kind of show you where I get those movements from. Is here's your kind of rectangles that I mentioned that kind of signify a deep sign of reversal or some sort of bottoming being found. In this case, you got a deep one here. I really think we should have gone here. If you look back at SPY, this was it was 531. Okay, so right into June, we hit a heavy resistance up here, but we were riding above the 50 EMA on the 4-hour, which is very strong to see. Once we hit that, they kind of just knocked it off the top, and then if you look at SPY or the market in general, it really got a strong sell-off, micro bull rally, very strong sell-off, and then from literally my birthday, last Monday, up until now, we've seen, I think I was looking at the other day, 6 to 8% declines in the market, if you count the Friday prior to 6/13. And just look at what AMC has been doing. Like it's almost only had positive days for the most part. Obviously, you had some red involved there, which is expected. But this is your divergence that you're seeing, because the market just kept kind of crashing down here, and then it's bouncing and trying to come up here and then testing these trend lines if SPY were to be here. You can kind of see what AMC is looking like in regards to strength and kind of just the grit involved against the market. This is why I don't fully understand why people truly think like 750 is in the works, just because if the market's gonna flush from upper 300s to 363, I believe was some of its lows last week, and AMC is doing what, a move from 1360 down to 1109, and then holding this strength, kind of holding this trend line or trading range right here, because these are the same white lines. I don't believe you're ever going to get down to the sevens, to be honest, without a full-on market crash. And even then, you're going to be catching on this green line, which is about 970-ish range. It's ascending, so it's going to keep going up. But first, obviously, you'd have to catch this descending resistance that has turned support multiple times, as you can see in here. So do I see 750? No. Do I see 8? No. Do I see 9? No. 10, again, off of a market flush, maybe. 10 is all the way, literally all the way, that's 1030. Here's 10 down here. I don't forecast that, unless markets are really going to just crash right now, which again, if you follow my Twitter, I don't forecast that either. And the 4-hour here, we're above the ESD band. So if you've been following, the standard deviation line is what algos essentially run off on the micro side of things. The higher increments in time frame you go on, the stronger the movement or crossovers dictate. Like here you got the cross to the downside where they just cranked it and continued to until they kind of found that reverse plateau. Here you're breaking back above your standard deviation line, above the 50 EMA, and really setting up beautiful as of our close on Friday. So what I'm looking for tomorrow, couple things here quick, and I'll get into like the zero gamma line and what we're looking for in regards to that, and kind of what that represents. So now I switch on a micro to 20-day 1 hour, just to give you some more depiction on potential events. So right now, let me flip over to it. Here's my nice SPY chart, which we can cover in another video. ES is not what I want to see. 1 second here. So here's your 1 hour on the ES. Again, I don't chart a ton on ES. I have some macros in here, just to kind of give me some good lines. But mainly I go off of our standard deviation lines, and your 50 EMA. These crossovers are extremely good to see. The one thing I am worried about here with ES is obviously you got your deep dive, multiple days, literally leaving gaps everywhere. But we got a crossover here off of FOMC, I believe that was. And I really thought we were going to break off of there. But of course, with equity leap derivatives expiration, they needed those shares for cheap, especially with the FTDs and the whole market being underwater on them. It's where it didn't fully surprise me that we kind of did this reverse J here, came back down, got shot down, and I don't want to call bottom necessarily, but this market is beyond ready for a melt up in regards to over leveraged short positions. I know the economy is shit, but every market dynamic that I know or have been taught is showing me that we're approaching or at the zones for a market melt up. I don't see much of any downside left near term. Obviously, there could be some. They won't tilt and crash the market yet, in my opinion. It would crush the entire hedge fund, institution, banks, everything. Like the U.S. equity market is literally the backbone of global economics for the most part. So the Fed knows that. The Democrats in office know that. I don't foresee that happening. Same with, again, macro market dynamics. Understanding that's a deep kind of conversation that I can explain in a different video. But we got this crossover here on the 1 hour with the ESD band or ES standard deviation line crossing to the upside of the 50. That should give us kind of some of these Bollinger Band crossover arrows to continue this run. Right now we're sitting about plus 1.6% on the futures. There's JPY, I don't remember, here we go. The yen, if this is going to want to work, sometimes toss is slow here. But I'm looking at the yen and a couple other figures to kind of better forecast potential events in regards to things that impact the market. Oil is obviously a big one. This massive dip is honestly really good for the markets. We kind of want oil to come down and stay somewhat controlled. This hike doesn't concern me. Once we're getting back above like this 114 to 116 zone on crude is when I'll be a little bit bearish, to be honest. Just shows that inflation's continuing to hike up there. Obviously, from an economic standpoint, it probably will. Bunch of different talks with FOMC coming up in the next meeting on what's to be there. But I called the 0.75, the micro pump, and then it made sense for me to have that sell-off going into the weekend with those FTDs being delivered. But what I'm most excited about this week is this is sitting pretty good right here. What I'm most excited about this week is you got your OPEX day on Friday. So that's kind of your equity leap expiration, which I mentioned multiple times. A lot of FTDs are going to be delivered this week. Meaning, into Friday of last week, they really wanted the price to get as low as possible so they could purchase these shares for cheap, whether that's SPY, AMC, GameStop, anything like that, like FTD wise, where these heavily shorted stocks kind of get an extra freaking 35 plus days to deliver shares that they don't even own. They're going to be delivered this week. So you got your equity leap expiration, you got quad witching day. We all know what happened last time with quad witching day into our 34 run and what we saw in the after hours. So tomorrow, market wise, there's a couple scenarios. We could melt straight up. Not straight up, but you know what I mean. We could have like a 1 to 1.5, 2% day in SPY, or start of the weeks are historically bloody. I could see maybe a pump in the morning, followed by some downtrend into the afternoon, maybe relatively neutral close or slightly red. As AMC comes about, it's influenced by the market, so I could see us potentially, if the markets are really red, come down and test 1150. That's going to be like a deep push, something like this, where they're really trying to get it back under this 50 EMA. I don't forecast that being the case. If anything, most realistic is potentially this 50 EMA is going to be curling up a little bit, maybe get a slight dip before open. I could see us dipping down to like 1215, or if they want to, all the way down to like 1190, 1195 range. Before we start moving up. But if markets open green, I think we go up and test that $13 mark in a hurry. And then I could see us kind of getting pulled down, 1270, 1265 range, just for a natural kind of cool off, just because that's how you get your strongest movements in regards to momentum continuation. But for tomorrow, if markets are stable, and we get kind of a 1 to 1.5% day on the SPY, I think we clear 13 easy, and honestly claim this as a new support line and stay above that. We don't have many big Fed announcements coming in the next, almost a week, I believe, which is good to see. Kind of lets the markets soak up the certainty, which they technically want. So I'm expecting a slight bull rally, potentially a market melt up, just depending on how quickly we get news, whether it's wars, ceasefire, something within the global economics, or within the Fed, or Amazon, or some big blue chips kind of getting a signal for the reversal. I'd be scared to be a short here. I know I'm pretty bullish in general, but I do try to see things from both sides of the aisle. So it's very oversold market-wide to where I don't see much of any downside within the market. Like I said, very possible we could test 1150 sometime this week if markets are just bleeding. I don't foresee that happening. I think this week we reclaim 13 as support. Hopefully tomorrow. It may not be until Wednesday, but Wednesday is going to be the equivalent of Tuesday on a normal week, meaning strong volume will start to come in off those deliveries from Friday. And we should be within this 13 to 1430 ascending range. Somewhere within there. I know that's a big range, but I do forecast this hitting this zone within the first couple days of the week. And then as long as broad market holds, we're going to get a nice flip switch here around 1430. But of course, we got to hit our 1290, roughly like 1295 now, to about that 1320 range, which is right here. This is like a good vibration zone, meaning short sellers are going to be, well, I guess market makers, I should say. I don't want to call out KG too much here. This line is going to be important here. 1290 to 1320 has been a pretty key level for me that I've been looking at. Shorts just seem to be kind of flustered within that area, and there's the zero gamma line at $13. as of right now for the month of June, meaning anything above 13 is when your market makers flip their delta hedge position to long gamma versus short gamma in order to remain delta neutral. So that $13 line is influenced based on open interest within the chain. So this is just a scalp account that I use mainly for charting. I have some July 15s in here, but my primary accounts aren't up currently. But what is exciting about this is your $13 mark has about 4,200 open interest. So gamma is basically the first derivative, or like the first layer into delta. Gamma, basically what it does is it tells you the volatility or expectation in the move of delta based on the dollar movement within the underlying security. So higher gammas are usually right around your at the money strike, meaning gamma ramping is when you have high OI and the first few option contracts that are just outside of the money or at the money. So you got a high gamma here at 20, same thing at 13. These high gamma lines, what it does is like once it gets 13 and goes into the money, those contracts, gamma is basically telling you the expected rate of change within delta. So as gamma rises, you got 20 here, delta of 50, meaning for every $1 movement in AMC, your option value is expected to increase by 0.5, all else equal. Like that's just delta alone. On 13, you got the same gamma, but at 0.41. So the more it gets into the money, obviously your delta rises. So that's where your market makers need to be delta neutral because they want to kind of keep risk off the table. Because at the end of the day, they're trying to make money as well. They provide liquidity. Some are malicious, cough, cough, Citadel, and Virtue. There's a lot of them. But anyways, this is the line we're looking for is 13. This is kind of the flip switch to where it will increase buying within both the options and the stock, increasing volume, basically because they're trying to hedge the short side of it by buying more long positions because your gamma is kind of maxed out in these zones. They want to remain delta neutral so that if it increases in volatility, the market makers are prepared. That's kind of the best way I can explain it, but I did just drop some good information on Twitter in regards to option strategies and intros for beginners, intermediates to understand your Greeks. But 13 is the level I really am looking for early on this week. If we break in through these ranges here and reclaim this 13 as support, like I said, I could see 1450, 1440 mark by Wednesday, late Wednesday, potentially Thursday. If that breaks, this trend line is going to be a little bit difficult to break, but if markets are truly getting that melt up kind of that I'm talking about, we're going to see 10 to 15% days in AMC. And this thing's going to be testing that 1580 mark pretty quick, to be honest. Once we get going, we just got to break some macros here along with your kind of harmonic projections. And then you got your horizontal lines as well that play an influence. But I really think a crossover here, which is obviously next week. I don't think it's going to take that long. But this crossover of this line is going to be a big one. You kind of argue that you could pull it down to here. But once we're above 1320 into the 1350s and so on, we're going to get volatile very quick. And if markets are performing well, I think we truly do see above 1580 this week, potentially into the 17s or much higher than that. It just kind of depends on what the market wants to give us. So if we break that mark that I just mentioned around 1350 and then go up and test this 1575, really it's 1640 mark that I am looking at, about right here where they shorted us off the last time. If we break this mark, that's going to be our pivot point. So I want to keep it kind of somewhat short within the video. I know I'm pushing 30 minutes on a lot of these, but it's just some good information to look at. So short recap, potential dip down to 1150. If markets fully flush out, we could go all the way to 1075. I don't see that, like I said. I'm seeing a bounce off of 1180 if we do flush out, and then testing this 1320 mark within the first 1 to 2 days of the week, and then 1420 and beyond, probably into Thursday and Friday, and then our big movements are going to be starting next week, especially if we can get this market to turn around. So appreciate you guys joining. I'll try and be more intra-week videos, maybe one every 2 to 3 days, just to keep you guys up to speed. Check the link in the description below. I'll put my Twitter account there, along with Rico's Discord. And there most days, kind of live trading with the guys, answering questions, and showing them what I'm seeing broad market-wise outside of just AMC. I do trade SPY a lot, and TZA and TNA. Just a great group of guys looking to help each other out and expand market knowledge. So appreciate you joining. Give it a like, subscribe, leave a comment, and I look forward to the week. It should be a fun one.